Aloha and good morning, Big Wave Trading family. It has been a crazy past couple of days on Maui. A major power station on Maui got struck by lightning on Tuesday and knocked out power to the entire island, leaving me kind of in a bind because my laptop batteries aren't the strongest, which means it's time to buy new laptops and battery backups. So, lesson learned from that experience. But at the same time, I already had scheduled on Tuesday and Wednesday to move a lot of artwork for my girlfriend's upcoming art exhibition. So you take the power outage on Tuesday along with me moving artwork on Tuesday, Wednesday, and the World Series started. And this is something that I really enjoy watching two amazing baseball teams play each other. Played baseball my entire life growing up. So it was just something that I put on the priority list. And that being said, of course, Tuesday and Wednesday has been extremely hectic. The market has been pulling back from its extremely overbought conditions, its insane, illogical, irrational overbought conditions, and that's causing a lot of stop adjustments, stop triggering, sell signals on an end-of-day basis. Please check the new positions page and know if there is a 50% or 100% sell signal, that means that on the stocks that are listed as 50%, half of my stops are going up to that low a day just below it, 1 cent below whatever the low a day the 50-cent sell signals are. 100% signals, if I still have any shares left tonight, I think out of all the sell signals, there was only one stock that I had a position in. I move it all up to 1 cent below the low of the day. So keep it simple, everyone, on that stuff. But tons of stops to adjust, reducing some on some stocks, adding additional ones on others. It was just a lot of work. It took me a few hours on Wednesday to do my Wednesday stops, and on Tuesday it took an hour plus. With that being said, something happened that I didn't think was going to happen. I got quite an insane amount of long signals. I'm going to run through them fast because I want to make it very clear here. The market is irrationally overbought, extremely overbought, one of the most overbought markets I've ever seen. The V-shaped rallies on low volume that are followed by these huge, massive one-day sell-offs is the opposite of a healthy uptrend. 2017 has been the least healthy stock market uptrend, yet at the same time, the most consistent, lame uptrend I've ever seen. The lack of pullbacks and the constant less than 0.5% up every single day has just been a grind. And now that the market's starting to pull back again, once again, weeks and months of gains are being erased in days. And that's what happens when you try to get long in an overbought market. So before I go through these long positions, remember, I'm doing it because the littlest amount of capital I'm putting in any one of these names is $1,000. That's the smallest position I am taking. And in SDOW, I'm putting $8,000 to work in SDOW. So anywhere from $1,000 to $8,000 in any of these positions you're about to see. Go check the new positions page for the right asset allocation level. And I'm only spending $1 to get in commission-wise and $1 to get out. If I was only putting $100 of my capital in each position and it cost me $5 to get in and $5 to get out, well, that's insane because that means I need to make over 10% on one trade to make money. But when you're putting $1,000 to $8,000 in each trade and your commissions are only $2, it pays for me to take these signals, cut my losses extremely fast if I'm wrong, and be wrong instead of not taking the positions and watch them all run without me. If I don't take any of the long signals and only take the hedges on Thursday morning and the hedges fail and every single one of these long positions work, I'm going to hate myself. Not really, but I'm going to hate that I didn't follow my system. So with that being said, let me get right to the long positions. The first new long position, the highest quality one, NRCIA. Every single one of these signals has the same pattern. Candle over candle, bullish price bar. Heavier volume or above average volume with my momentum trending oscillators confirming or my BOP indicator confirming. So NRCIA is the first long. It has earnings, let me check my list, on 10/31. So everyone should just avoid it. I'm going to go long 1%, 1.5% of my account capital at 38. My first cut loss, 36.75. My final cut loss, 36.04. I'm going to know if this stock doesn't move higher immediately, then I'm wrong sooner than later. And I'll probably be out all before earnings if the stock doesn't move higher immediately. If the stock moves higher immediately, fingers crossed, it'll be a gap up and I'll be sitting pretty. But NRCIA, can slim quality, low price perfect speculator scan quality, automatic long position, earnings a week away. If I don't get filled immediately, I'm not going to be chasing the stock. So it either fills at 38 or it kills. The next new long position, MTLS, the same thing I was talking about, the candle over candle bullish price bar. And even though BOP and volume isn't super strong, my oscillators are confirming. And support is right here. It's curling right off the 50-day moving average. So I'm going to get long MTLS at 14.99, the high of the day. My first cut loss level here, 14.55. My final cut loss level, 13.61. It fails this low, before getting to this low, I'll be moving all my stops up. There won't be any questions asked. But this chart is too bullish to pass on. If I pass on it and MTLS breaks out to new highs, like I said, I will hate myself for not following my system. So I go long at 14.99, cut my loss at 14.55 or 13.61. Remember, if you decide to go long, just use that first stop level, 14.55. Don't wait around. Same thing with NRCIA. Don't wait to 36.04 if you decide to go long. Get out at 36.75. I know what I'm doing. A lot of the new traders I'm talking to, it's kind of clear that this is still a bit confusing, and until I can put up a how-to page, a video lesson page, going into deep detail of how this methodology works, err on the side of caution. This is not a market curling higher from oversold conditions with this chart pattern existing. This is a chart pattern that has developed after a market that's already been in a long uptrend. If this pattern right here, with that curl right there, the candle over candle bullish price bar, was happening after a 10-20% market pullback and a follow-through day on Wednesday, oh yeah. Oh yeah. But it's not, so play it safe. The add signals on the long side, I'm going to stick with CLMT. Beautiful bounce right off the 50-day moving average, above average volume. Want to get long at 810, high of the day. First cut loss right there, 759. Second cut loss right there, 729. Thinks a 5-cent stock, so 755, 725 would be the stop. So it's CLMT. Beautiful right off 50-day moving average. This is a new long because it was in the perfect speculator scan. MTLS was a new long because it's perfect speculator scan. Or NRCIA was a new long because it's perfect speculator scan. MTLS was a new long because it's perfect speculator scan. CLMT is an add because it's a perfect speculator scan. SPPI is an add because it's perfect speculator scan. SPPI was also confirmed in my green bot for the past 20 sessions scan and in my max green bot for the past 5 days scan. So all of this max green bot, beautiful. This tight price action, beautiful. The candle over candle, beautiful. The near high day close, beautiful. I like this chart a lot, but it's very extended, so it's extremely risky. So I get long at 1965, only 0.25% of my account capital, mind you, despite it being perfect speculator, low price, bot green for the past 20 days, and max green bot for the past 5 days. And my one and only cut loss on this ad right there, 1781. And then the final ad is soda. Soda, I initially went long where you see this white triangle bar right here. I have a huge win in it, 142%. But I only have a few shares left. I have about 5 or 6 shares left. I think it was 6 if I looked right. So I want to add to it, but I only want to add a quarter. So it's not even going to be, it's going to be a little more than a quarter, like 33%. So I want to go long a minor on my end, 2 shares. I'm going to be buying 2 shares of soda. Soda has earnings on November the 1st. I've already been in it for a long time. It's not like there's green bot, but this is a can slim quality and perfect speculator quality. But since I only have 6 shares, I guess I might double it up and do 3 shares. Right now I only have 2. Might as well double it to 3. But that's really going to increase the dollar cost average. But I've been taking profits on this thing consistently, especially around here when it started to really fail. So I don't have a whole lot left from that initial entry. And don't forget, my initial entry came right before earnings. So this, sadly, was never a large position to begin with, but so does an ad. The only 2 signals that really anybody should focus on, SDOW, EPV. EPV is the ad signal, 3266 limit. My one and only cut loss will be a move below the 52-week low at 3161, so 3160. But SDOW, this is the main one. 2% of my account capital for making 2 scans. Limit order SDOW at 2381. My one and only cut loss 2310. If this thing can even get back to the 50 or 200-day moving average, that'll be a huge win for the inherent risk. But out of all the new long positions in this market, they're all risky. The only two trades that aren't risky is the hedge in EPV and the hedge in SDOW, and that's because the inherent risk is right there, and with the market this overbought, it's almost a guarantee that these work. However, I don't know how well they work. That's completely up to the market. But with as overbought as we are, with these hedges rounding out off the lows, I'm already long the SRTY hedge, VIXI in my margin, VXX, since you can't get long VIXI in my IRA. You know, there's already been some hedges and they've been working. And as long as this market remains as it is, I'm going to focus on hedges over new long signals. But I'm not going to completely kill long signals until they all start failing. Whenever I have a new round of long signals and they all fail, uh-oh, now we're really pulling it in. But as long as stocks like SPPI, MTLS, you know, are setting up out there, it's hard to completely halt all long operations. All right, everyone, a little bit longer video lesson, but there wasn't much commentary. I've been super slammed. I can't do the reasons for the sell signals and the percent gains. Maybe I'll catch up this weekend, maybe not. I really, really can't stress how much I hate this current tape. All right, everyone, I'll see you in the chat room Thursday morning. Aloha.